that. David Stryzewski joins me now. David, good morning to you. Let's start there. Look, we are seeing hiring slow down, but having said that, it's still pretty robust, maybe more robust than the Fed would like. What's your reaction?
Yeah, sure. Good morning, Ashley. So yeah, we're seeing the jobs creation slowing down, but unemployment is relatively static right now. So there's more layoffs that have been happening, however, in Q1 this year than all of 2022 last year. So that's a very important point to be noting today, given the fact that we're just seeing this trend kind of come in here, and this is exactly what the Fed is hoping for. One of the big challenges, I think, with the unemployment rate, and the reason why we've not seen that reduce as much, is because we've seen a lot of baby boomers actually retire. And so it's important to understand that if you've got a numerator and a denominator, and those that are working, the denominator keeps being reduced, well, guess what? Your numbers aren't going to fluctuate that much. And so I think that that's an important consideration to be looking at as we're understanding and getting some of this data in there. But those boomers are also getting into Medicare and Social Security, and that's better than 60% of our entire GDP today, which is a part of the problem that we're having, in this debt ceiling conversation that no one really wants to be discussing right now.
We saw manufacturing manufacturing could be in recession right now. It's hard to tell, but certainly things are slowing down. Do you expect a recession, and how deep could it be if we get one more rate hike from the Fed in May?
Yeah. The leading indicators here. So the ISM index has been a great indicator of success and health of our economy, and that has been slowing. And so we just saw that prop down here more than what expectations were, which just say that we are in a recession. We are entering into one right now. Depends on how you define it. I'd say that most average Americans would declare that they're already in a recession, but we've got different ways of looking at this from a macroeconomic standpoint. I think globally, if you look at things right now, the globe is entering into a recession, which is very concerning given the fact that that's very rare in its occurrence. But, we've got big problems at the banks here today, Ashley. And, if we're not in a financial crisis, we're certainly in a recession at the banks because of all the challenges that they have with these higher interest rates and the expense of, 4% plus, needing to pay in order to compete with treasuries. And if they can't compete with treasuries, then they have all these outflows that start showing up on their balance sheets. They can't afford to make these loans. And, those local regionals, which are responsible for about 70% of all corporate debt, as far as, the real estate goes and the capital that they're borrowing for growth and improvement. Where are they going to come up with this money right now when all the cash has been flowing out of these local regional banks? And so these, to places like the Treasury. So it's a concerning moment right now in our history, if I can be honest.
Wow. Some sobering words, but we appreciate your input today. David, thank you very much, I think, for that assumption of assessment of where we are. But it is reality. David, thank you very much. Now this.